Hello folks, this is Nick Folks from Drake & Associates with your August 2016 Educational Economic Update. In this month's video, we'll talk about some of the events that influenced the markets in July and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for our required disclosure statement. Markets had a lot to think about in July. A British exit, interest rates, and earnings seasons all affected the market's movements last month. After dropping sharply at the end of June, following Britain's vote to leave the European Union, markets regained steam and rallied for 4 straight weeks, pushing the S&P 500 and Dow to new records. We often talk about the importance of not overreacting to market declines. This is the reason why. We can't predict how the markets will perform after a shock, but the biggest market days often come shortly after a pullback. Calmly assessing the situation and avoiding emotional responses is a smart strategy for long-term investors. Let's talk about some of last month's economic events. The Federal Reserve held another open market committee meeting at the end of July, and they voted to keep rates steady. The Fed's decision wasn't surprising, and now the debate is on over whether or not the central bankers will raise rates at all this year. Investors were surprised at the end of the month by the low first estimates for second quarter economic growth. The first official measure of second quarter gross domestic product showed that the economy grew by just 1.2% over the previous 12 months, after growing 1.1% in the first quarter. This came as a big shock, as economists had expected to see over 2% growth last quarter. Over the past few years, the economy has set a pattern of slowing down in the end of the first quarter and roaring back up in the second. Though we'll see several more official revisions of the GDP growth estimate, 2 quarters of slow growth is concerning. However, looking at the data, we see that a drop in business inventories ate away at the growth. Economists expect to actually boost the economic growth in the rest of the year as businesses rebuild their stockpiles. Consumer spending was the biggest driver for economic growth last quarter, which is a great sign for the economy. A strong labor market, rising home prices, and wage gains all support additional consumer spending this year. The Federal Reserve took the GDP report in stride, stating that they believe near-term risks have diminished. We can take this to mean that they may want markets to prepare for a possible rate hike this year or early next. What can investors expect in the coming weeks? In a word, volatility. Overall economic fundamentals in the U.S. are looking solid. However, turmoil overseas, a presidential election, and anticipation of future interest rate hikes will likely affect the market movements. As always, we'll keep you informed. That's it for this month's Educational Economic Update. We have some upcoming Social Security workshops on August 16th and 17th at the Muskego Public Library. We also have Financial Survival for Retirement in September at Mount Mary University. Please visit wealthwisconsin.com for upcoming dates and locations. Once again, this is Nick Folks with Drake & Associates, signing off for the month of August 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 414-409-7226. We'd be happy to talk with you. While we believe the information we report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase of or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services are provided by Drake & Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Loft Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products.